Well, good morning, everyone. Welcome to another wacky week in the mornings, another wacky week in the market, rather. This is Trading a Smaller Account. My name is Barbara Armstrong. I'm a coach with Schwab, and delighted that so many of you are either here live watching this or tuning into this in the archives. And what I want to talk about today is keeping the emotions out of our trading. And having said that, I was just pretty emotional before it all began because I was listening, to some commentary on what's going on in the market and hearing, phrases like economic vandalism and demand destruction and, all of those things. And it's very difficult not to have an emotional response to those things. So we are going to talk about how to look at what's going on, how to manage our emotions, and how to potentially benefit, from what's going on in the markets. And again, I encourage us to, we'll talk about going back to our goals and all of these things. Yeah. So if you are not following me on X, I invite you to do so. My handle, Barbara Armstrong CS for Charles Schwab. I have the privilege of having Mike Fairborn with us in the chat today. He's a friend and fellow coach, and he posts a lot of great stuff on X as well. So you'll want to follow Mike Fairborn CS. I want to thank all the usual suspects for being here today. Lisa and Will and Jeff and Josh and Carmen and Riceberg and Jack and BJ and Peter and Ray and Greg and Alfred and Kurt and Wiley and the rest of the gang. Thank you all for bringing this webcast to life by being so participatory. If you have joined us for the very first time today, feel free to type a greeting into the chat. So that we can welcome you. This is a community where we link arms together every Monday and Friday, and we are figuring out how, an investor or a trader might trade a smaller account. We start out every year with 25,000. Well, in past years, it's always been 20,000. And, we're placing lots of example trades in this. And as we do that, we're having conversations about other things that are pertinent to the market. And the last week, we've talked a lot about kind of the psychology behind trading and some of the disciplines. So we're going to continue with that conversation today. We do trade options in this class. Know that options carry a high level of risk and aren't suitable for all investors. We do not recommend that only technical analysis is used as a sole means of investment research. It is important when we look at the charts to understand what is happening in the world around us, what is happening politically. Tariffs are now on the tip of everyone's tongues these days, and that's certainly having an impact in the market. Earnings season, is another thing that can influence markets, analysts' upgrades and downgrades. So we need to be aware of the whole of what's going on. And technicians would argue that, the charts are a reflection of an amalgamation of all that information that the market currently has, but it behooves us to be aware as well. The Paper Money software application is where we place our example trades, and that's a brilliant place to learn and make sure that we understand, our strategies and what we're doing before we consider trading in a live account. One of the nuances or differences between Paper Money and a live account is that short options will never be assigned early. Okay, so we're going to go out and have a quick look at the market now. Mr. Kevin Horner does a class at the beginning of every trading day at 9:30 Eastern. And if you haven't been watching that, you're going to want to check that out because he, does a 45-minute overview of what's going on in the market. And so I am keeping my market overviews a little shorter, and in fact, so short, you could hardly see them for a while. But given what's going on in the market right now, we're going to spend a few more minutes on it than perhaps, we have been in the last couple of months. So let's come out and look at the S&P. And so, one of the things I want to point out, and Peter is saying, yes, Kevin's class was outstanding. this morning, and Riceburg is saying, I have green in my scarf. Is that a good sign? Well, I thought that I should wear something that was a little spring-like and cheery, given, the Red Sea is continuing, the tsunami of red, seems to be continuing again today. And, this market, the S&P down, 1.5% almost. And I want to draw your attention to the length of the wicks on these candles, on this candle. Like, it is just huge. And what happened this morning at 10:30 Eastern, someone reported that there was going to be a pause on tariffs, and the market rallied dramatically. And then the White House came out and said, JK, like, we never said that. In fact, if China doesn't revoke their tariffs, we're going to add another 50%. And the market didn't take too well to that. And so, we've got a tremendous amount of volatility here. And somebody is saying in the chat, like, hey, is this a potential recovery? Or is it a dead cat bounce? And like, where do we get some of these expressions, right? Like, we won't go into that, and somebody's saying, I went from panic to FOMO in 60 seconds. And I'm so glad that you said that, because what is panic? It's an emotion. What is FOMO? It's an emotion. What is fear? It's an emotion. And what is hope? These are all emotions. None of these things should be part of a trading plan or a consistent and disciplined trading strategy. Okay. And when we look at this, and it's down again today, but it opened lower than where it's currently trading. Could we say, oh, here is our bottom? Well, really? Like, to me, that's like trying to catch a falling knife. And when we try and catch a falling knife, what can happen? We can end up cut and bleeding. And if we look at, since this whole tariff thing came out last week, down 12% so far in 3 trading days. And today's candle is still live. If we look at the recent market highs, down 18.8%, getting close to 20%. I mean, that is extraordinary. And so we've got to look at this, and we look at the NASDAQ, and I drew this line here, and I've just extended it because we had this deep pullback, and then it seemed to rally, cross this diagonal support line, came back and bounced again, and that looked pretty bullish. And then Wednesday happened, and the S&P down 12%. The NASDAQ down something similar. And from its high back here on February 19th, down 23%. That's the correction territory. That's considered recessionary when it gets, over, 20%. But it definitely, well, let's not say recessionary, this is now a bearish trend. Like the people in the industry would say correction if it's over 10%, a bear market if it's over 20. And we're, there on the NASDAQ. And then when we look at the Dow, it's more of the same. We had maybe not this all-time high, if we come up here to this 450, we're down 17%. Our low today, down almost 19. But, this is, very dramatic, down another 2.5% since the end of day Wednesday when all this stuff was announced, 11.3%. And then we look at the VIX, I mean, I know we're expecting it to be up, but I mean, it hit 60 today. Wow. Ouch. Ouch. And even still, it's trading at 50. Like if it closes somewhere around here, that's, we'd have to come back. So we had one day, and this was kind of an anomaly. I will often correct that candle. But we haven't closed this high. Well, let's go back and see. We haven't closed this high in the last 5 years. And, it's been 5 years since the pandemic. Like, so if we come one day, and that was March 1st of 2020, it didn't close that high. And these are now monthly candles. But like we're in the nosebleed section for sure. This was pandemic, April of 2020. And, the pandemic was a global medical catastrophe. And we won't get into the politics of how that was handled globally. But, many consider that to be a somewhat unavoidable global event. This global event, some are arguing that it was, it may be perhaps, fixable or might have been avoidable. And so how do we trade this? How do we trade this? And if your answer to this is, I don't know, or I'm not sure, there's validity in that. Especially when, if we don't have a solid understanding of the thought process behind some of the decisions being made that are impacting world markets, and we don't fully understand it, then it's harder to predict, what might happen next. Okay? It's harder to predict what might happen next. And so given this context, what do we do? And so we can still look for opportunities, and what's one of the benefits of the VIX being this high is that, option premiums are going to be very high. But if we come and we look at, and the S&P, you would have thought it would have just been a total sea of red, but, we have a few stocks, and if we look at the actual number, and this is where we are now in the day, this chart has had, many different colors, I think, throughout the day. First thing this morning, but it's still 446. So that's 88% of stocks declining on the day as of this moment. How about the NASDAQ? 76% of stocks declining. Dollar Tree is doing well today, which is interesting. Yeah. So, and then how about our Dow? 26 out of 30 down. And two of the ones that are up, JP Morgan and Triple M, they're, 3 of the 4 are up less than 1%. And then if we come and we look at the Russell 2000, the majority again, sea of red. Okay. Okay, so let's come and why do I point this out? Well, I point this out and I point the VIX out because if we're looking for opportunities, do we want to be on the bearish side of the street? More likely than to be on the bullish side of the street, when we look at what's going on. But then we have to keep in mind when we thought there was a pause, when the market thought there was a pause announced on tariffs, there was like this immediate and dramatic rally. And so if this whipsaw is a possibility, it's kind of like that trying to hug a porcupine thing. We want to do this very carefully, right? Right. Okay, so having said that, let's come and look at Home Depot. So when we look at Home Depot, because there's a lot of stocks that are really tanking today, but when you are so far below a support or a potential resistance level, you know, we could do a long put vertical, assuming it might continue to fall, but what if it rebounds? And so when there's a lot of uncertainty and an investor may be trying to, walk on the side of caution and to take advantage of how high volatility is right now. If we're looking for a selling strategy, if we look at something like Home Depot, which had this head and shoulders pattern, it broke down below. And if you say, okay, this pattern was what, $47 wide. So if we take 385 minus 47, we could say, well, we could see it going maybe down to 338. It actually came down to 333, which is kind of fascinating, right? Like, do you guys see this pattern? Yeah. Louise, just a sec. Let me bring up my drawing tools. They're just waking up after a weekend of sleep. So here's our head and shoulders pattern, which if it breaks below is considered bearish. And a potential target might be this range, which, and this is, support and resistance on these as a range as well. So from 385-ish to 432-ish, that's 15 and 32, like say 47-ish. So if we went 47 below, that would have had us about 338. So, but could we potentially say, well, here's a potential support given it's come down, rallied, and broken below this support level, might this 350, 355-ish level potentially hold? Or could we even come out to 360, with volatility being high? And so let's come out to the trade tab and look. We do have earnings coming up. Now you may say, like, we just had earnings, and we did, but we've got earnings coming up. Okay, what's the date? May 20th. So we'd want to be out if we're doing a short vertical prior to May 20th. So could we come out and look 3 weeks out, say to May 2nd? And when we look at our contracts, the 350, we've only got a 60-cent bid-ask spread, but we've only got 21 contracts. That maybe meets our minimum requirement. We want at least 20 times. It's saying we have a 35% chance of it closing in the money, or maybe we want to go where there's more contracts. Here, this one, we have 138, at 360. And so, and then plus we've got another $10 worth of wiggle room. And right now it's trading at 336. Now, could we get enough premium? Maybe, maybe not. Now, one of the issues here, 615 to 7, that's 95 cents. That's over 10%. If we look at this 350, we've got close to $1, but that's on a 980 to $10 option. So let's just see, what we get here. And when there's so much volatility in the market, spreads tend to be higher. So here at 360, let's draw this on the chart. We'd get $1.60 credit for a trade we'd be in for under 3 weeks. So let's find our 360. Edit. Now, when we're thinking about what's going on in the world and in the markets, could we, and if we do this as a short call vertical at 360 and then 365, if it's true and that there is some demand destruction, so might people be putting off some home renovation projects, or might they be trying to escalate them because they're afraid that tariffs are going to drive up prices further? And there could be a bit of both. depending on, what type of job you have and if you're concerned, there's just a lot of uncertainty in the market in general. So could that have a negative impact on Home Depot? Spring is coming. A lot of people go to Home Depot to buy things like mulch and that kind of stuff. So could it be seasonally to Home Depot's benefit, the fact that we're heading into a new season? But, if we look at this strike, we're just saying, hey, for the next 3 weeks, we think this might stay below this 360 level. In fact, here's a level of support here, the top of this candle, a level of resistance. The top of this candle could be seen as another level of resistance. The 10-day moving average has been acting, was acting as resistance, then support. Could it end up acting as a level of resistance? And so if we look at this, the next question is, if we get $1.50, how much are we risking? So let's switch this to our calculator. Say, well, if I can make $1.50 and I'm risking $3.50, this is a trade we would be in for 25 days, and that's a potential 43% return. And so if we say, okay, well, we're okay with that, we're going to come to first trigger sequence, right click, create an opposite order to buy it back when it's worth about 29 cents. So 80% of our max gain. We're going to make that good till canceled, confirm and send, and we're going to put that in our short call vertical group. And the bid-ask spreads are a little wider than we normally like to see them, but we're in these kind of extraordinary times. And so, we might say, hey, concerned about bid-ask spreads being a little wider than normal. Now, so we've got that in here, and we can see if that ends up working against us. And this is a weekly option, so we looked at the fact that there can be less liquidity sometimes with these, and that was part of the reason that we went out further. And, so it's saying we have a 24.7 or 25% chance, according to this, that is the probability of it being in the money. So a 75% probability that it could expire worthless from where it sits right now. And so, that's Home Depot. Like if we come and we look at something like an Apple. Oh. Now, what's the challenge with Apple is that, it rose a lot, at one point today. Like if we come to a 1 day, 1 minute, we can see that when that news came out, and this is Mountain Time, it really rallied and then, has come back down and is continuing to downtrend. And so if we look at that and think, well, then, but what this says is if there is a change in tariffs, we could see a dramatic upswing. And are we sure that we won't see that? And this is where so much of the uncertainty is currently in trying to make these types of decisions. But if we say, well, even if it rallied, might it stay below this 195? And why do we even have that as a line on our chart? And in all honesty, I'm not sure. Let's go out to a year because this was, it broke through this support level, which it had hit several times, and then rallied and then broke down again. And now it's below this support level. Now this support level was kind of we can extend it to the left here. But it's not a support level that's been hit repeatedly. So might it act as new resistance? It could. But if we're not, if we're saying this wasn't a major support level where it spent a lot of time, then it may not be a major resistance level. And it may. But, we might look at this and say, and then we have earnings coming up on May 1st. So when I take all these things into account, I don't have a high enough degree of confidence that I might say, yeah, based on where it's currently trading, it makes sense to sell, a short call vertical here at 195. And so based on that, you might say, well, I'm just going to pass on that. And as we look at these different stocks, we have this conversation with ourselves, right? Right. When we look at Starbucks, we saw something that came down to around this 87 level, went up to 117, which is a pretty dramatic march up the hill. And then, came back down. It seemed that somewhere just below this 100 level, we seem to have a resistance level. And now it's broken down back down below this 87. Another thing that happened today with Starbucks, and I brought up a watch list of stocks that had downgrades, but Starbucks is one of them. So they, Bard downgrades them to neutral, lowers the price target to 85. Goldman Sachs lowered their price target from 111 to 103. These are not, great signs. Bernstein adjusts their price target on the 4th. And all of these were down. And even if it's a higher target than where the stock is currently trading, Baird was 85 and it's currently sitting at 78. So all of them are higher than where it's currently trading, but it's, the sentiment is not strong. And we've got earnings coming up on the 29th. And so, could we look at doing something short enough? So maybe 18 days out. And then one of the questions is, when we look at these, do we have enough volume here? And we have a 15-cent bid-ask spread, but we've not got a lot of volume. And here's still a 15-cent bid-ask spread, but it's marginal. So we've got the volume, or we've got the bid-ask spread, and we've certainly got the volume on the stock. Now, more might come in, but this can make it more difficult for us to exit our position. And sometimes when you have thinner trading, some might say, I'm just not going to place the trade at all. Others might say, well, I'm going to recognize that because there isn't as much liquidity, if I chose to place this trade, and we want this to be actually at 80, above 87. So here's our 87. And if we look at this 87, 88, okay. So here's our 88 and 90. We have 50 here. So if we looked at this 87, and again, we've got wider bid-ask spreads when we go a little further out. This is 18 cents. So that's over our 10%. So, but if we looked at this 87, and that's about 18 cents on that one too, 87, and we'd want to sell a vertical. So we're trying to take advantage of this higher volatility. If we did this 87, 89, we'd get 44 cents. Or if we could do the 88 and the 90. Let's see, if we did 88. So that's 30 cents and we're risking $1.70. That doesn't look so hot. But if we did 87, 89, that's about a 30-some% return, for a trade that we would be in for under 18 days. So 49 divided by 151. That's a 32% return. And let's go and look at where that puts us on the chart. Right at this previous support level, which might become new resistance. Now, some might look at this and say, not confident doing that, because when I look at this candle pattern, this candle is indicating that this downtrend may be complete. Okay. Okay, so let me just look at the chat. Yeah, somebody said regarding earnings, it'll be interesting to see how each company forecasts future sales and earnings based on current uncertainty. Peter, that exact same thought crossed my mind. Like, this is going to be a really earnings season, because when we look at future projections, I think that's going to be tough for companies to be able to plan. And if they take best case and maybe we see some best case, worst case scenarios, not sure. But if we go ahead with this and say, concern may be, a potential bounce, but this could just be a step along the way. And this is the challenge with trying to trade when markets, have this much uncertainty. And so if we say, okay, we are going to, okay, this was at 50 a minute ago. And so what we might say is like, hey, if we can get 40 cents for this and we're risking 160, and we can get that 25% return, maybe we'd go for that. For 18 days. If we can't get that, we're not going to play. And it's currently saying it's at 41. So we're going to say we want to buy that back at 8 cents. And how many of these could we do? Well, if we're risking 160, we could do 3. And be in that, $500 range. Make that good till canceled. Confirm and send. So our potential risk, 477. Our max profit, 123. Yeah. Put that in our short call vertical group. Now, one of the questions I get asked a lot is, how do you pick the ones that you do? So I've not actually done this recently, but I just went to analyst downgrades and thought, well, a lot of people may be reacting to the markets just based on, what's happening in the markets in general. If these stocks have also been downgraded, might there be more fuel in the fire? And if we look at that, April 17th, so we might first come and just say, let's click on all the ones that don't have a blue dot beside them. And these, are all stocks. Now, if you're not as familiar with this company, you may say, well, we could go and look at the company, but this is also trading under $20 a share. Babcock Wilcox, this is under $1 a share. So, we haven't done a search on just stocks, that are part of the S&P, for example. And so we're going to get a list of all stocks that receive downgrades. And so you might just look within this downgrade list and say, okay, well, I want to see, I'm just going to click on the ones that, are familiar to me. Are we confident that just because this has come down to a former support level that it's going to bounce, or are we trying to catch a falling knife? And if your answer to that is that feels more knife-like, and again, earnings, is this week for this one. So, I just clicked on one with a blue dot. How about Fox? Well, Fox is falling. This is a live candle. And so we might just say, hey, I don't have a degree of confidence that the fall is complete yet. And it's not that close, to a support level. But, out to May 8th, would we be confident in selling a short call vertical above here? And if the answer is no, then what do? We move on. PCAR. I had drawn a support level here. Now, that may have been a few weeks ago. And, but again, when we see, like we saw this candle on Friday, which is looking similar to a lot of candles today. And you may say, ooh, well, that looks like an inverted hammer. But when I'm doing these short videos on these different candle patterns, but what do we need when we see an inverted hammer? We're looking for confirmation. What is confirmation? Confirmation occurs when the next day, the candle of the next day closes above the body of this day's candle. Did that happen? No. Well, now we have another inverted hammer type pattern, or, doji, this candle of indecision, saying, gee, maybe the buyers and sellers are duking it out and the selling is coming to a close, but would we want to see confirmation? Some traders would say yes. What might that confirmation look like? It would look like a close tomorrow above the high of the body of this candle. And so we don't have an entry. And I think that what we're going to see is on many of these that from a technical perspective, we don't have an entry. And so if we're continuing on and we're looking for things that don't have a little blue dot beside them, and and yet on Starbucks, we did place a trade. And so you may say, well, hey, that was breaking a rule. And I don't know if we filled on that. So we did fill on that. And so that will be part of our conversation going forward. So somebody's saying, what does it mean that tariffs are baked in? And by that, if you've heard someone say that, it's that the current price of a stock is a reflection of all known information about that stock and the market it is trading within. But, we don't necessarily know what the next announcement is expected to be. And if you do have a degree of confidence, then, one way or the other, then you may choose to trade differently. Okay. But, we've just kind of gone through that list of analyst downgrades. Or you could say, well, let's look at what's happening on the NASDAQ right now. And it looks like it may have rallied a bit since we first started this class. And we could just bring up this public watch list and start clicking through. And are we looking for bullish opportunities or bearish opportunities? Some might say still looking for a bearish opportunity. And again, candle that may be indicating, that we have found a bottom. This is considered to be a bullish harami happening at a potential support level. And some might say, well, be that as it may, I still want to see it climb back above this 160 level before I'm, popping open the champagne. We're seeing a lot of these, candles of indecision today. And so as we go, Cisco, CrowdStrike. And again, if we look here and we come back, well, we had a support level here. It came down to within the neighborhood, came down again. But it opened low and it's rallying now. But, tech stocks, This is a company that makes uniforms, but how would you characterize this trend? I kind of look at it and go, I'm not sure what to make of it, because, it came down, then had this nice rally, old resistance, new support in this range-ish, and then it came back down and broke below it. So it was kind of in this range. And if I get rid of that line and we put a new line kind of here, but is this support level around that 189 going to hold? Jury's still out. Jury's still out. We don't have confirmation. DoorDash, bullish engulfing, but in the middle of nowhere land, we had a support level kind of here. It broke below that. So is this going to end up acting as a ceiling? Don't know. Dollar Tree. So we've been trading Dollar Tree because it's been in this sideways range, and we've done that fairly successfully. We've done a few iron condors. So do we think it might stay within this range? And if one did, a trader might consider doing that wash, rinse, repeat. We're on the other side of earnings. But some might say, hey, we've just had a big move in 2 days. This is up 7.5% today. And from beginning of day Friday, it had a big day Friday also. It's up 17%. So, some might say, well, rather than committing to an iron condor, I'm going to see if it comes up and pulls back again. We're seeing a lot of these bullish haramis, after a big drop, but we're also seeing a lot of those candles of indecision, and we're heading into earnings. And so I guess what, the message is today, think things through, take a deep breath and say, I'm going to take my emotions, and we're human beings. So it is hard to do this. I'm sitting here looking at the chat and, but we're human beings. And so it's hard to put our emotions aside, but say, I'm not going to trade based on fear. I'm not going to trade based on fear of missing out. So FOMO, another flavor in the fear family. I'm not going to trade on hope. I'm going to look at the charts. I'm going to follow my rules. And are there some rules you might want to massage a little? Yes. Bid-ask spreads might be a little bit wider than normal. And so we may want to account for that and have a plan for that when it comes to exiting our trades. Or we may choose to trade less because we're trying to trade more mindfully, or because when we look at all the factors that we're trying to take into account right now, we may not be able to trade with conviction. And if you can't place a trade with conviction, there's always tomorrow. And what did someone say that I thought was so clever? The decisions we make today, if we're conservative today, it will ensure that we have money to trade with tomorrow. And so that trading with consistency and discipline, it is important. We have to take into account that there are a lot of people in our country and in other countries around the world that are feeling uncertain right now. And how might that impact their travel decisions, their spending decisions, their retirement decisions? A lot of retirement accounts have taken a big hit this year, and might some people decide to stay on in the workforce because of that? Might there be companies that don't hire because they're uncertain about future demand? You know, so all of these things have to be taken into account. So I know this was kind of a sobering message today, but I didn't mean it to be, you know, all, I didn't mean it to be like a scare tactic or, you know, hey, you know, terrible times are ahead. Like we've had a lot of success in trading in down markets. But one of the challenges can be, you know, when there's a lot of uncertainty navigating that. And so, you know, we're trying to hug our porcupines carefully and delicately tiptoe through the tulips this spring. So guys, that's what I had for you today. Thank you so much. Have a really awesome day. There is a survey in the chat. Would love for you to fill it out. Hit the like, hit subscribe, and we'll see you in a webcast coming up soon. Take care, everyone. Bye for now.